Yesterday, the euro continued to lose value. However, it failed to fall below last week's low, thus paving the way for a more significant upward correction. Meanwhile, the British pound hit a new low. Both currencies remained under pressure, weighed down by downbeat data on manufacturing activity in the euro area and the UK. Later on, traders received similar statistics from the United States. The ISM's manufacturing PMI stayed below the 50 threshold for the ninth straight month, which prevented the euro from extending losses and hitting fresh local lows. Today's macroeconomic calendar is bereft of any important news releases from Europe. Thus, the first half of the trading day is likely to be calm, which will allow the euro and the British pound to win back some ground. In the North American session, all eyes will be on the ADP National Employment Report. U.S. private payrolls are forecast to increase only by 189,000 in July compared to a jump of 497,000 last month. If the reading is below analysts' consensus estimate, the greenback may come under severe pressure. In this case, the risky assets will gain value. Otherwise, if private payrolls beat market expectations, the US dollar will most likely gain strong upside momentum. After all, this could enable the Fed to delay monetary policy easing. From a technical point of view, the 1-hour Euro-American dollar chart shows that 1.1000 acts as a psychologically important level. The market reaction to this level following this week's US labor market data will determine the pair's further mid-term trend. If the price breaks above this mark and tests it from the top down, a strong buy signal will be generated. In this case, one can count on an advance to 1.1043 and probably 1.1095. Short positions at 1.1043 can be considered only amid a false breakout. At the level of 1.1095, traders are recommended to go short on a rebound to catch an intraday correction of 35-40 pips. A false breakout at 1.1000 in the first half of the day will create a sell signal, thus bringing the euro down to 1.0955. In this area, buyers are likely to make every effort to regain control of the market. However, if the price breaks below this mark and tests it from the bottom up, amid upbeat statistics from the United States, the euro could plunge to 1.0911 and even 1.0871. At the level of 1.0871, it would be a wise decision to go long on a rebound. Long positions at 1.0955 and 1.0911 will be relevant only amid a false breakout. Speaking of the British pound, bears are stubbornly pushing it to new lows. As long as the price is below 1.2792, the British pound American dollar pair is expected to keep trading downwards. Given that Britain's economic calendar is empty today, the focus of market participants will be on US labor market data. If the price rises to 1.2792 and forms a false breakout at this level, a sell signal will drive sterling down to 1.2743. Its breakout will open the way to 1.2711 and 1.2675. At the level of 1.2675, I recommend going long on a rebound, counting on an intraday correction of 25-30 pips. Long positions at 1.2743 and 1.2711 can be considered only amid a false breakout. Alternatively, bulls may take the lead at 1.2792. If the price breaks above this level and tests it from the top down, the pound sterling will have every chance of gaining to 1.2836 and 1.2884, backed up by gloomy US statistics. At the mark of 1.2884, it will be possible to open long positions on a rebound in the hope of an intraday correction of 25-30 pips. Going long at 1.2836 will be relevant only in the event of a false breakout. Best of luck.